Like Swanson, Wall Street Window. I want to give a quick update today as we're going into the closing bell about what sectors and what stocks have been leading on this recent market rally of the past 4 days now. This is the fourth day, and what is lagging, because I think it may surprise you. There's tremendous excitement about this recent move. If you're watching what people say on Twitter, the people that are most actively following and engaged with the market, they're trying to trade it. They're trying to find things to buy, things to do. And when they see up days, they jump in. And that's what they're doing. But is that necessarily the smart thing to do? Well, it is if this is a real rally that's going to lead to big gains. But each rally we've seen so far this year has failed. And the last one failed right on the 200-day moving average. And that's important because in a bear market, that moving average tends to act as resistance. And it's been doing it all year. Now, uh, what's important though is to look at times inside the stock market, inside the averages, to see if anything is actually changing. Because when you do get a new bull market, typically you will see leadership shift into a new sector of the market. And there's sector rotation that tends to also go on in a long market cycle. In a bear market, though, typically what will happen is everything acts crappy until you get towards the end of it, and then you'll start to see things hold up when the stock market's declining. Now, we're not in that situation. We'd have to see the market go lower and then, wait to see what holds up. But is anything changing on this bounce? Well, let me show you the software I use to do that, to answer questions such as that. It's TC2000, and I've loaded it up right here. It's because it's black, it may be harder for you to see on this video. But what it enables me to do is rank sectors and stocks by their performance. And what I've done is simply looked at the performance of the last 5 trading sessions. Decided to take the low of last week and just see what's going up the most, and we can see what's not doing well. And actually, that's real useful to know. What's not doing well on a market bounce like this are things to be extremely cautious about, because if this rally stops and we start to go down again and may go below the recent lows, those things lagging on the bounce often end up falling the most when the market starts to decline. So, but here, what I've done is I've ranked the stocks inside the S&P 500. We'll look at sectors in a moment by their performance over the last couple of days. REGN is number one. You see, it had a giant gap up, likely news driven. DXC Technology, number 2. Royal Caribbean Cruise Lines, number 2. Now, I want you to notice, though, that both those two stocks are way below their 200-day moving averages. And they're likely, as a result, going through short squeezes. They've been lagging the market all year. And the fact that they bounced hard the past couple of days simply means they're volatile stocks, but they're still lagging. The same is the case with Caesars Entertainment. It's one of the worst performing stocks all year, but it bounced hard the past couple of days. It's a more volatile stock, prone to short squeezes. So, just because it's gone up well the past couple of days doesn't mean. Look at the relative strength line on the bottom. That's the red indicator on the bottom. You can see it. It made a new low in July, and it's just going sideways right now. Dish Network, same story. Zimmer Biomet. That one I would say looks more positive than the other stocks. If I was actually looking to buy, if I believed the rally was going to really continue, this might be a stock I'd be buying, because it's managed to close above the 200-day moving average, or at least it's above it as we're speaking, and it's above the August high. This has a constructive chart pattern. So if I was looking for a buy, I might be interested in that one. So Gilead, there's a couple biotechs that have been on the list, I would say. Here's one that's making a new high. Energy stock. Etsy's another one. So a lot of these are just stocks have been doing awful, and they just bounced hard the past couple of days. We've only seen really one that's in a possible buying position. This one's more positive. Ross Stores, Expedia, another big laggard stock. This stock crashed. It just looks like a dead cat bounce. Ultra Beauty, a new high. Match Group, it made a new low last week, and it's just bouncing off that low. Just because it's bounced hard doesn't mean anything. This one, again, here's one I would say has a more positive, constructive chart pattern. It's above the 200-day moving average, potential base building to clear the August high. If I was bullish on the market and I wanted to buy stocks that I thought could do well, this would be one I'd be looking at. Lincoln National, just a laggard. Target, crashed. Another one crashed. Rockwell Automation. So I would say we've looked at 30 stocks. Here's one that's got a good base. Biogen. I'd put this in the category of potential buy. If we'd seen a real panic washout in the market, the VIX up towards 40 and real fear and panic, this might be a stock I'd buy along with those other three. So we've seen 3-4 stocks of constructive chart patterns out of these 30 top performing stocks, S&P 500. Everything else, dead cat bounce. I think that's the best way to think about what's going on with the stock market right now. Now, what about the worst performing stocks? CF Industries, an agriculture stock. Mosaic, an agriculture stock. Now, I don't own these two stocks now, but I did own them in the spring of 2020 up until recently, and I sold them. I just raised more cash in my accounts. But these two stocks were among the top performing sectors of stocks, actually, in the entire stock market last year, up until the spring. In fact, Mosaic last year was one of the top 5 stocks that I owned out of like 200 that made me, the largest amount of money. Exxon was one of the others. NVIDIA is lagging on this bounce, even though it's one of the most widely owned stocks, one of the most popular stocks to buy. It's typically in the top 100 on Fidelity among most bought stocks every single day. It's on the top 100 Robinhood list, and the stock has been lagging the market all year and is lagging on the bounce. If I own this stock, I would liquidate and sell, even if I thought the market was going up, and move into a different situation. HP broke down. Advanced Micro broke down. Now, one of the things happening is, I'll show you. We'll look at the sectors. Hormel Foods, Domino's Pizza. It's down today. Domino's Pizza, JB Hunt, trucking stocks, Old Dominion Freight. A lot of trucking stocks are among the top of losers. Boeing, which is in the Dow, lagging the market. It's down 4%. Even with a market rally of 4 days, it's down 4%. Tyson Foods down. Halliburton down. Energy stocks are not trading as well as they were a couple months ago. The last video I did, someone asked me, what do I think about energy stocks? Because I've been so bullish on them for years. I'm not saying much about them now because I think they're due to digest all the gains they had. They're in a correction and some sort of consolidation. I think they'll get bullish in the future, but that's not right now. Sadly, the same story is with mining stocks. Now, and I'll show you why I say that. What I'm going to show you now is the TC2000 breaks up the stock market into 238 sectors. And the worst performing sector is non-metallic mineral mining. Agriculture is up there. Electronic equipment, semiconductors. Semiconductors are one of the worst performing sectors of the market on this bounce. They've been one of the worst performing sectors of the market all year. NVIDIA is in that sector. AMD is in that sector. It's a sector people love to trade, but it is a millstone in people's accounts. And the recent rally is only confirming that fact. It's a sector to avoid. Oil and gas drilling, not doing as well the past couple of days. Movie stocks not doing so well, despite the fact that people are trying to trade AMC like it's January 2021. Trucking stocks lagging. Now I mentioned mining stocks. That sector has been lagging the market, and that's why I'm not that excited about it at the moment. I just think it's going to take time for it to build a base, and then it may take several months to do the base building and then emerge out of that next year. Base building is what I talked about in this 3-4 stocks when we looked at S&P that I thought, oh, these got constructive patterns. That's what we need to see. We need to see gold stocks, other sectors, not the whole market doesn't have to do it, but just some good sectors create some constructive chart patterns, some bases while the stock market is, having the next decline whenever it happens. That'll get me excited about buying stuff. But right now, to me, 4-day bounce, yeah, it's nice to see it, but I just don't see anything, when I look inside the stock market, there's really, not an entire sector to me to get excited about. And maybe that's why, when I look at that Fidelity top traded list, more and more people are doing these triple ETFs, and more people are trying to day trade meme stocks because they're finding it more difficult to buy into stocks and sectors that they can hold for sustainable trades. But day trading is a difficult game, and I'm not here to teach you how to day trade. Most people try to do it, lose money. It's harder than buying and holding. It's just tough. So there's other people out there that can help you with that. I'm not going to try to do that. I'm just trying to give you my views of what's going on overall with the stock market so we can adapt and adjust to that when the time is right and situations line up with good profit potential. Now, I want to point out to you that one troubling thing about this bounce is, as I'm speaking, TLT is red today, and the bond market is not confirming the stock market bounce. I think the bounce will fizzle out. I'm not sure when. I'm not sure if it's going to fizzle out tomorrow or next week. It's very difficult to time the very short-term gyrations. I'm more content just for now to be very cautious about doing much of anything on these markets and just kind of, I'm not really looking to make any changes, just see how things unfold here. And that's what we'll do together. So if you're new to my YouTube videos, hit the subscribe button, hit the bell next to it, and then YouTube will send you an alert as soon as the next video is up.